Hello, everyone. This is Prashant here. I'm the conference producer for AIM. I apologize for the delay in starting the webinar today. We were facing some technical issues, but I hope we have resolved it now. Just starting off, we would like to first of all welcome you to the sixth edition of the Annual Investment Meeting webinar. The Annual Investment Meeting is the largest investment platform in the world, an initiative of the UAE Ministry of Economy. AIM has been promoting a healthier global economy by linking investment opportunities to fast-growing economies under six key pillars: foreign direct investment, foreign portfolio investment, small and medium enterprise, startups, and future cities, with a special event, One Belt, One Road. Just a few housekeeping notes before we get started. If you experience any technical issues with your audio or video during the webinar, just refresh your browser and that should take care of everything. We would also suggest using Chrome, Firefox, or Opera. If you have any questions during the panel discussion, please type them into the question box in the control panel on the right-hand side of your screen. If the question is addressed to a particular speaker, please do mention their name at the start of the question. If you like a particular question, vote for it under the question tab so we can address it to our speakers. In the panel discussion today, we will cover the topic investment rules. What has this pandemic taught us? Our speakers will be covering the following points. How does COVID-19 become a strong disrupting force in the economy? What are the permanent investment lessons that the pandemic has taught us? What are the investment rules to know when investing now and in the future? I would now like to introduce our moderator for today. I hope we are able to connect with Marcus. I will just invite him up on stage. Yeah, I think Marcus is on stage. Hello, Marcus, can you hear? I would just like to let you know that if Marcus is unable to join us and moderate the panel, uh, Mr. Taimur has been kind enough to moderate the panel instead of Mr. Marcus, if Mr. Marcus is not able to join us. We'll try once again if it is possible for him to join. Otherwise, I will invite Mr. Taimur to take the lead. Hello, hi Taimur.
Hi, how are you?
I'm good, Taimur. I think there is some technical issue with Mr. Marcus's connection. So I would kindly request you to, if you can just take the lead on the panel discussion today.
Okay, sure.
Yeah.
Hi, everyone. Before I introduce the rest of the group, perhaps a safe time instead of doing everyone's bios once they answer their first question, if I may just ask the panelists at that time to introduce themselves before they answer the first question. So my name is Taimur Labib. I'm a founding partner at Affirma Capital. We are a independent, privately run private equity business with $3 billion, $3.5 billion under management, and we spun off from Standard Chartered Bank last year. So I think today we will start a little bit global, and then we'll move regional. And the nice thing about our panel is we have investors, we have advisors. We have sort of, I think, the best of both worlds to be able to, to hit these topics. So I think first question, if we just sort of start from, I guess a backdrop on, how would, Saeed, I'll ask you first on this one, and please introduce yourself when you come in. How would you rate how the regional companies have done so far? And, are there any examples in your mind of a company or two, and you don't have to name them, but what they've done well here to weather the storm?
Sure thing. I am Saeed Alawar. I head Rothschild's business in the Middle East. Just very extremely quickly, Rothschild is one of the leading investment banks and advisory firms globally, and we do a lot in the region and globally in M&A, equities, and also debt advisory and restructuring. So we do see a lot of the flow, as Taimur has indicated, of how stressed some companies have been, and on the other hand, how successful other groups have also been. And I think I would say two things, Taimur, to answer that question. I think the question is not restricted to probably corporates only, but also we see obviously stress across the board on it would apply to governments, GREs, and then all the way to privately owned groups. And you see different levels of stress depending on how much financial discipline has been really exercised by a lot of these groups. So in some cases you have, I would say, governments that have adopted very strict fiscal disciplines that have put them in a very, very good position to weather the storm here and have enough buffers in their systems to weather the storm. You also have corporates, I would say, corporates that have been lucky enough to be under-levered, have available credit lines that they could use and utilize. And we all know here, Taimur, I'm sure you have seen that in your portfolio as well, is where credit lines have been available. People have used them to the highest degree, even if they're not sure whether they need them or not. Having cash in this environment is paramount, and it's absolutely important. On the other hand, we've seen, and especially this applies to the more cyclical part of the economy, people who are institutions and entities that are playing a role in that cyclical, or the part that COVID-19 has impacted a lot. No matter how much cash you may have, additional equity injection is definitely required. People are in a very distressed situation. I don't think anyone has a clear picture yet of how damaging the effect has been. And for us to talk about lessons learned, I think is a bit too early probably to talk about that, but there are, I think in the next couple of months and a few months, we'll learn much more about how much damage has happened to these sectors. I'll pause there, Taimur, and hand it back to you.
Thanks, Said. Marcus, I see you're back on.
Can you hear me?
Okay, you owe me 100 dirhams. I'll hand it back to you.
I'll definitely pay. I mean, I could go at any moment. I think I'm, arcade computer. I think that's a very good point, Said. And you're talking about distress and the need for equity. I mean, James, I'd be interested in your view. I mean, obviously Alvarez and Marsal, huge restructuring firm, behemoth, and are you seeing the wave of distress yet in the region you expect, or do you think that actually, some of these decisions are down the road? But as Said was saying, there's obviously a great need for liquidity.
Yeah, I think that's right. I mean, I think we're still in the period where companies are trying to contend with the short term and deal with a very difficult situation. And so from our perspective as a firm that advises companies, particularly in times of stress, we've been very busy talking to companies at the moment, but as you say, decision making is still relatively paralyzed. And so I think that will come. But I think it's all hands to the deck. I think there's a lot of internal resources applying themselves to manage cash, to deal with their internal procedures, to deal with this the impact of this of coronavirus. And so actually, really, from an advisor's perspective, at the moment, there isn't much room for an advisor's voice because they're trying to figure out what to do about their situation. But no doubt there is a lot of stress in the market, and no doubt that will come out in the future.
Taimur, just back to you before we perhaps hear from Shabraya and Faisal. You obviously just spun out of Standard Chartered. You've got a lot of firepower. Do you see opportunities? I mean, you wrote something I think recently about the role of private equity and capital in this sort of recovery from the crisis. Do you see a lot of opportunities for investors like yourselves? And what are you actually seeing in terms of? Is it too early to make decisions, or what are you seeing?
No, I mean we're seeing a pretty good pipeline actually. We've we've scanned about 20 transactions in the past 2 weeks. So there is quite a bit coming through. Valuations are coming down. For the most part, people are stressed. The fundamental issue here is getting a handle on 2020 EBITDA. It's very hard right now to figure out how the rest of the year is gonna play out. So, unless you can structure something with a ratchet or an earnout, it is challenging to close a deal right now. But I think in general we are seeing better valuations, and we are seeing interesting things in interesting sectors that perhaps wouldn't have been for sale previously. I think another interesting thing will be what are going to be the key sectors going forward. I think as supply chains globally become regional again, there will be a lot of sectors that will be now viewed as imperative to local and regional economies. And I think that's going to be very interesting here, especially in a place like UAE, which can continue to act as a hub for the region.
Faisal, I'm interested. Obviously, Camco, I think you're particular with a particular focus on the regional financial services sector. Very interested in your view, because in terms of opportunities and indeed challenges for that sector specifically.
Yeah, well, thanks. Of course, just to put a bit of context, Camco is one of the top 5 largest asset managers with over $13 billion of AUM, client assets under management. We, of course, focus on asset management, investment banking, and brokerage. Plus, we're based in Kuwait. We have a full-fledged company in Saudi, in the UAE, subsidiaries also in Jordan, elsewhere. So our focus is regional primarily, as you rightly stated, and I think the asset classes we're involved in. So our real estate is international. Unfortunately, we've been exposed to areas that have been quite strong even during the crisis, and haven't suffered there. We've got over $1 billion in that space. I think the equities and the debt side is going through a lot of turbulence. I mean, if you look at the investment banking, investment bankers deal as JLMs on transactions. This has slowed down a lot, and companies raising non-banking kind of financing are facing probably delays in the ability to raise money. Plus, if you talk with some of the regional banks, and our guys are continuously talking about how to arrange financing, it's not due to the lack of clarity on what happens next, what happens to the EBITDA levels, what happens to the cash flow situations. It's been a bit slow to get transactions up and running. On the equity side, of course, year to date, we've seen a huge drop all across the world, despite certain parts. And you can easily say that the 11-year U.S. bull run has come to a near end, and this is equity markets have suffered a lot. They've recovered in part, but still, I think with the situation the way it is, the turbulence, the volatility, and of course there are great opportunities. I mean, take Kuwait for example. I was speaking to some of our friends in the Borsa or in the exchange, and we see a lot of foreign money coming into the market. So it's active. Kuwait, for example, having been part of getting into the MSCI index of emerging market companies has helped a lot. And I think the markets in general have presented opportunities there, and also risks as well. So investors are generally cautious with their cash. I think what was mentioned earlier on as well about keeping liquidity. I think the biggest focus is to really maintain as much liquidity as possible as you see the situation opening up for you. On private equity side, we have part of that. I think some of the operating companies have depending on which sectors they're in, have suffered, and of course valuations impacted if you're doing an exit or you're doing an acquisition. So depending on where you sit, situation is fluid right now.
That's very interesting. I mean, we're seeing an uptick in activity, and obviously, our private equity business is, exactly as you say, Tim. I think busyness is down down the line. Cheripa, I wonder from your perspective, I mean, more on the infrastructure space, it would be interesting to hear. I don't know, you know, I mean, Taimur mentioned the sort of question on supply chains, but, you know, in a way, the Middle East is well positioned, is it not, to take advantage of this, in a sense?
Yeah, I think from my my perspective, the fact that AP Moller Capital is more Africa-focused private equity fund, so Africa would be a great way to probably analyze this particular question. And yes, to an extent, we'll see supply chains being redesigned and then thought through from a local versus global perspective. I think from a private equity investing in infrastructure, given the fact that these countries in Africa are already behind in terms of the infrastructure investment, primarily in the transport and energy sector, there are opportunities which will be captured to also take into consideration the opportunities that are presented by this pandemic is more of the decreased valuation for some of the well-operating companies that will present opportunities for likes of PE firms to lap them up. In terms of just, you know, expanding the whole supply chain, the trade aspect of it, the fact that, you know, your ports are the entry and exit point of any country and provide the gateway for importing necessities, especially in the African region, and also exports of their raw material. I think there are opportunities. Of course, you have to tread a bit carefully. You have to, if you're sitting on a pile of cash, it's a great time to be, because you will be able to cash on to the opportunities that are being presented.
I think it's interesting. I was following some of the chat, and we've got people from far and wide, and lots of people dialing in from Africa, actually. And I saw Sierra Leone, a country I know well. So hello, Sierra Leone. We've got some great questions coming through, which I'll pose in a minute. But I want to just ask Saeed, and just do encourage you. I'm keeping an eye on this. I think this is a broader one, but Saeed, what's your view as to how well regional businesses were prepared for this, how well people have adapted, and, you know, how the sectors are comparing? There's a number of questions about oil and gas. Naga has asked, you know, said that the pandemic is destroying the oil and petroleum industries. Things have been moving so quickly, but I'll be interested in your thoughts on that.
That's a good question. Well, one thing I would do first, just to comment on the infra piece as well, just before I go into this, is
Of course.
the infra piece is something to really watch, and I think opportunities for private capital across Africa and the Middle East, I would say, will come up in the infra space. And I know there's a number of private equities that are actively looking at this and are approaching governments here. And I think there needs to that interaction needs to happen, and I think will happen. You see the ADNOC deal on the pipelines as an example, and you have all a lot of the big players there, Brookfield, BlackRock, etc. A lot of names that are competing to take part in that and invest. And I think you'll see more of that. The Saudis have announced also something along the same lines, and I think it's a great idea for governments to diversify how they raise funds in the future, especially the oil-dependent economies. And I think this will be a good way to bring private capital into the economy as well. Now, to talk about sectors and how prepared people will be, I don't think anyone realized or expected this to happen. I don't think you can say that anyone was really prepared for this. I'm aware of examples where we've been involved in where people have said, let's take this financing, will give us a really great buffer, but actually, you know what, let's just wait for January to come in and we'll just get things signed. January came and the option disappeared and the business is in trouble. So I think one thing you see is that one decision, one delay, what this has taught us is delaying decisions on especially when it comes to liquidity is absolutely the wrong thing to do. Now, in terms of sectors that are, how are sectors faring out, I would just go quickly across what has actually played well. And I think these are sectors you'll expect them to have played well. So food, generally, the food business, I'm not talking about F&B here, I'm talking about food processing. So more on the food supply side of things, food processing, fresh food, protein or vegetables, or less on the agri side, have actually performed extremely well. And you see this globally, not just necessarily in the Middle East. And the pandemic has actually strengthened their abilities. They're not outperforming necessarily, but they're performing according to budget. There has been some disruptions in the supply chain, perhaps, but not to the extent that people probably fear. And maybe, I mean, look, we can't predict what's going to happen in the future to them, but at this stage, they're doing okay. The pharma companies are also doing relatively well, and as you will expect. And they are, again, I would say, not outperforming, but performing to their plans. When we talk about healthcare, and this is a sector that people will say that's absolutely defensive and nothing will happen to them. Actually, it's a bit more different. It's a bit different there, and I would say perhaps primary healthcare has done relatively okay, but then the more specialized healthcare, where you have the choice of whether to do it or not, like cosmetic surgeries, for example, or IVF, people are deciding not to take those things up, and so that part of the healthcare system is probably suffering at the moment. I won't go on for long, but this is essentially what's going on. The ones that are severely distressed are the obvious ones that are directly impacted by the COVID-19.
No, that's really interesting, and obviously, Rothschild, you've got a huge perspective over the sectors and the industries that you obviously cover. Throwing this back to, if I may, Faisal, Taimur, or Charaparaya, for your views on how private equity is a question that's been asked here. How private equity, or what? Sorry, Emir's asked what measures shall institutional private equity buyers take to reduce prospective risks that have arisen as a result of the pandemic? And then a question from Khaled, which is interesting. How do you see real estate in the light of restricted travel? So two questions from our audience there. I don't know who wants to. Taimur, do you want to take it first, and then move to Fires and Cheraparai? But what measures are you taking, or do you anticipate you need to take?
This is on the portfolio management side? That was the question?
I think portfolio management, and also I think you've already outlined to a degree, but also when you're making new investments, and there's going to be some rescue investments, I presume, as well.
Yeah, so I think on the portfolio management side, we've always been a group that spends a lot of time with our portfolio. I think now it's even more so, daily, weekly, hourly type of calls. Definitely focusing on cash, focusing on receivables, focusing on inventory, payables. Where can you stretch? Where can you be creative? So sort of stuff out of an A&M type of playbook, frankly. So I think that's one aspect. I think the second aspect, sort of more broadly, private equity. I think when we look back at this in a year or two, this is going to end up being, I think, the largest hit on consumer discretionary income that we've seen in our generation. So I think everyone, the guy who used to buy the Porsche is going to be buying an Audi. The guy who's buying an Audi is buying a Honda. The guy who's buying a Honda is taking an Uber. The guy who's taking an Uber is walking, right? So everyone is going to be downsizing. And I think for private equity investors, this is going to be really critical because volumes may still be there in certain businesses, but where are the margins going to come from, and who is going to enact those margins? And I think the other thing is the efficiency of the businesses that survive are going to be fantastic. I do think you're going to come out of this with 2 or 3 or 5 businesses in the region that are going to be really world class. Because if you can come out of a crisis, if your management team can do a good job, and you can survive this, you're in great shape. One thing I always like to say is you have a lot of CEOs here that are beta CEOs. These are guys who've done really well because markets were growing 5%. Let's see the guys who come out of this the next year or two, the real, alpha producing CEOs. These are going to be the guys who are going to be, really the rock stars. And I think when management teams come out of a crisis, they come out so much stronger. And I think that will help the entire ecosystem here going forward.
Rock stars. Faisal, what's your view on that? Are you seeing some rock stars emerge?
In terms of opportunities, of course.
Opportunities and management teams.
We have to remember we're still early on in this. I mean, you may come and say that there are winners and losers right now, but it's too early to say that. In my opinion, I think you will have a short-term, medium-term, and long-term, like any other problem or impact that happens. So right now, in the short term, of course, we have severe problems in the aviation, tourism, even the F&B. I mean, you might come and say that due to the situation and social distancing, the food business is going to do very well on the delivery side. Yes, but if a business model was set with part delivery, part sit-in, then they have to readjust that business model, readjust that cost. So there's a lot of ripple effects from everything that's happening. So I think, yes, you may have some short-term gainers and you'll have, they might not be in the long-term gainers. So there's a lot of work that needs to be done at looking at business models and looking at how you can do. As investors, of course, we have to look at all these things as they unfold and put our scenario analysis looking at it. Now, on the real estate side, I think a few of the questions have been raised on that front. Of course, it depends. Real estate is a wide, whether it's in the development side or on the other side. I can speak about what the area we're focused on. We're focused on the core plus area where we have very long leases with the acquisitions we've done. Now, strangely enough, we had one transaction that started in March or in late Feb, March. It was a $100 million type transaction. And we interacted with the market and we saw that there was demand, despite the fact that there's an issue. It all depends on what you're looking at. So if you're coming in the real estate side and talking about commercial real estate, for example, then that's very worrying because of the pandemic. If you're talking about certain opportunities that are shouldn't be touched by what's going on, then you might worry about what will happen to it in the medium term or in the long term. The risks and the rewards are aligned, of course, with these kinds of decision-making parameters. But on the real estate side, of course, you've got a big impact, I think, on the real estate that is on the consumer side, on the commercial side, on the touristic, hospitality side. These are hard-hit sectors.
I just want to Paralyzed, just before I'm interested in your view, and it's just I wanted to draw your attention as well to comments by Sami Kazi, which is Africa is untouched, and especially Angola, where there's huge business opportunity. How can one make optimal use of this situation? So to your point on Africa, which I thought was very interesting.
Yeah. First of all, I'll echo the comments made by both Taimur and Faisal in terms of the opportunities and who will fare well and how it would be assessed. Because I guess clearly for portfolio management, from a portfolio management perspective, I believe the companies which have got strong corporate governance fabric, the fact that they have ongoing engagement with the customers, with the suppliers, with the vendors, ability to do data-driven impact analysis, and how quickly or how agile they are in carrying out the changes, they would be the ones who would be able to capitalize on this particular situation in the medium to long run. In terms of Africa and Angola, I guess quite a few countries in Africa will face significant recessions and significant downturn, and the ones as mentioned, Angola is one of the biggest losers in this because of the double whammy caused by oil and gas prices plummeting, and the fact that it has commodity-based exports. So both of them have been hit hard. Same goes for Nigeria. Same goes for Equatorial Guinea, and if you look at Africa as such, which is basically a raw material supplier to the world, will have a tough time. But as previously mentioned, the opportunities would be, from a portfolio perspective, would come from diversification of the cargo types. For example, in case of ports, if you handle beyond containers, if you handle bulk and general cargo, then you have an ability to spread it out, because agricultural sector is still booming, or will continue to be a mainstay, wherein food is really a necessity and will need to be imported, especially in many countries, right? So I guess, I mean, if I had to, from my firm's perspective, if we had to invest, I think the ability to join hands with the government, which are already stretched in terms of their borrowings in the continent of Africa, you have a key role to play as a private sector, which has the ability to invest and free up the capital that the government currently needs for resolving other more important issues where private participation is still less.
That's interesting. That, I think, reflects Tamar. I'm going to come to you, James, now, but I think that reflects an article you wrote on, how private equity can support, SMEs, and from a sort of public policy perspective, that seems quite an interesting idea. James, I just, you guys obviously, you advise on all ends of the spectrum, but as you said, the sort of wave of distress hasn't really hit us. I think people are, as to Faisal's point, I think it's right. People are still figuring out they're dealing with a very live situation. But there are some industries, it strikes me, that tourism will come back, but the hotels are shut for a time. We will reopen even if it is in a different shape or form for business. But a lot of industries, obviously, hospitality, etc., retail, have gone through a very difficult period. What are you advising to them in terms of how they get through that immediate period before the sun rises? And what would you be advising people at the moment to do who are facing extreme sort of liquidity issues, but who have got fundamentally good businesses?
Well, I think we'd already talked about managing cash, managing working capital. So I won't repeat anything on that topic, but I think something that has been touched on is operational efficiency. And it's all relative, so it's less of a sector issue, but clearly, relatively, those that have got their house in order will have sort of fared better through this process, are able to make quicker decisions, and are able to prepare themselves for when we come out of this crisis and take advantage of opportunities. And I think as we've all disappeared and started working from home, and all those procedures that companies have in place to manage their business and to monitor their business, the controls they have in place have been stretched. And if you're able to maintain that, if you had invested in technology sufficiently that you could operate your business during this period, then you might be okay. For those that haven't, then there's a lot of catching up you're going to need to do. And I think what we should bear in mind is that it's going to be a gradual process before we are really back to normal. And I think we're still only getting our heads around what back to normal is going to look like and how long that process is going to take. And so the longer that companies are in this abnormal state, the harder it is going to be to get back in, to get back in the saddle and to operate efficiently. So there's a lot of operational restructuring that companies are going to need to do as well to improve how they make decisions, to improve how they monitor their businesses, and to improve their understanding within the organization of the legal impacts of decision making. And I think that will be a big theme for companies in the future.
That's very interesting. I mean, it's funny. I have a couple of questions on, which I won't go into too much on legal services, but could SMEs benefit from more competitive legal services? And one, James, maybe James and Saeed, for you, from Mohammed, which is what are other general percussions on the legal and other professional consultancy sectors? I think quite a relevant point for Dubai, because we have such a high number of professional advisors here, and that's quite a key driver. I mean, from my perspective, at White and Case, it's really revolutionised the way we work, and I'm now much more IT proficient. Although I couldn't still get into this call at the beginning, and Tamar had to take over. But in terms of those professional type services businesses, I mean, there's a sense that life may never be the same again. And do you actually need people are asking sort of questions, do you need welcome all the panelists' views, do you need the traditional office? I think this period has shown that we want interaction, but actually the old norms are going to be stood on their head to a degree, aren't they? I mean, Saeed, interested in your view.
James, do you want to go
or
first?
James?
Yeah, okay, well, let me go first then. I'll go first then, just to so essentially I think look, repercussions on other consultancy services. I think it really depends on what you do in that consulting, in that value chain. If I have to be honest, I think legal, I would expect them to see an uprise, an increase in a significant increase in work. Restructuring experts will probably also, I guess, to some extent, be needed, right? I mean, I think you need to look at what skill set do you have, experience do you have, what does this economic cycle require to really help people through this cycle. But again, I think we need to think about how do we help people through the cycle, because it's in our collective interest that the economy is back on its track. So it's not about making the most out of the cycle. It's about getting the economy back on its feet. And on the second question, in terms of business models and operations, look, we globally at Rothschild, we have also been put to the test here. We're more than 2,000 people globally, and we have more than 1,000 bankers, and we've been put to the test in a very short period of time, and it actually worked surprisingly well. But I'm a person who believes in human interaction, and I think we will not stop interacting as human beings. And I think transactions and investments have to happen, especially in the emerging markets world. And I'm sure Tamar and others will have views as well. I think you need that human interaction to validate who you're speaking to, who you're partnering up with. And also from a team perspective, I think we work in teams. Yes, we have Microsoft Teams and other platforms, but the human interaction has definitely a different feel. But I guess the last thing I would say is the need to be in the office all the time, and for people who need flexible hours, this has proven that this works. And I think that's a very important step forward for different people who have different needs. Yeah.
That's interesting. James, your thoughts?
Well, I mean, look, it's not been easy. The way we operate as a firm is to be hand in glove with our clients, dealing with their issues on the ground with them, and it's difficult for us to do that remotely. So it's a challenge. We're lucky enough that we had the technology. And most companies have been lucky enough to have the technology to be able to switch quite quickly just on the basic working from home model. We benefit from those personal interactions, as Saeed was saying, and that's where our value add is working directly with our clients.
I'm so conscious of time, but I think we've got time for maybe one or two more questions. I want to just a couple of. So I'm following the chat. We've got really amazing on this. We've got people from the USA, Trinidad and Tobago. So welcome everybody on listening in. But we've got Sharif and has asked a sort of question, and which is interesting. Is the COVID economy changing the sectors or companies that you will now be interested in, or are you considering those companies that you wouldn't before, and there's more questions about winners or losers. Now, to your point, Faisal, it's probably too premature to draw absolute conclusions from this, but I think, Chaparaya, if we maybe start with you, but is there any sense that you are looking at things that you might not have looked at before, or that there's a particular niche that you'll find that might be geographies as well? You've touched on Africa. Is it changing your investment approach to be perhaps more flexible?
Yeah, I mean, you're right that you would want to consider a few more sectors to invest in. I mean, the fund is primarily focused, and the mandate is only for transportation and energy sector for this fund. But if there is a future fund which would come soon, it will have digital platform as one of the areas that it should focus on, given the impetus that this particular sector has got from the whole COVID situation. It was already increasing, but it has catapulted. So if you see Africa, the way Africa has adopted telecommunication, it never went to a landline stage. It just leapfrogged into mobile phones, and you would imagine that e-commerce could be something that Africa would adopt as a continent quite fast. So that would be one of the areas that would be interesting to get into and consider.
No, that's interesting, because I know from personal experience, and actually from working on deals, for example, and coming over is actually Sierra Leone, from Europe to Sierra Leone, and realizing that people just transferred money on their mobiles. I mean, it just didn't happen when I was living in the UK. So Africa, in a sense, got ahead of the game. Faisal, I'm interested in your view on that as well. I mean, in terms of what you're seeing, in financial services in particular, are we going to see, that the role of the traditional bank branch, diminished and much more being done online, innovative financial products? I mean, you can see it already. What's your thought on that?
I think a lot of companies are going through a crash course of understanding what digitization really means. And it's easy to say that digitization is just having a nice front office with some of the clients, but it's not. It's having something that's integrated all the way from the back middle office to the front office. So it's testing times. I mean, as a company in the financial services side, we're in a sector that's going through tremendous changes in technology that will impact the future way the business models of the companies operating in it. Whether it's a financial company or a non-bank financial company, you will have a significant technological impact. Now, with one good thing, I think, for larger companies, listed companies that are regulated in good markets in the GCC, is that the corporate governance criteria framework has put a lot of focus also on things like business continuity, so BCP, and how your location, if something happens to it, you need to. So all these preparations, data warehousing, segregating, the information, firewalling, all of that. So there's a lot of development that started, and I think it's being expedited now due to what has happened. Now, I think moving forward, of course, you have different options that companies will be facing, but the financial sector will go through a great change, in my opinion, in the coming 5 to 10 years.
Timur, the floor is yours. Timur?
Yeah, hi. So I'll make a couple of quick points. I think on working from home, et cetera, I agree with what the panelists said. I will comment, though, I think we are going to start hitting a phase in the next month or so where, because you're not interacting with new companies, new people, and there's so much you can do on Zoom, et cetera, deals will start slowing down. I think we're all going through our pipelines on existing deals, and you're doing light touch on new deals, but until you can really spend, a month or two with a business owner and getting to know him or her very well, it'll be very tough to put new money into a new company. So I agree that I think in some ways this has been a blessing that this actually works and the infrastructure works and people can have flexibility, but we will need to have an ability to have more face-to-face meetings to get new deals done in the second half of the year, I think. On the question on companies that we would invest in now, look, I don't think anything jumps out because if you look at every company here that is doing well, or I shouldn't say doing well, but has been able to show they're more resilient, has done it through the technology perspective. So, for example, now you no longer need to go to see a doctor here in Dubai to get your medicine. They'll send you via text to your insurance provider. They approve it. Your pills are delivered to your house. 3 months ago, you had to go and sit in lines in the hospital to get your medication. The same things with other type of sectors. So I think efficiencies are going to be fantastic, which are here to stay. But I don't think any company will come out to say, I do this better than anyone. It will be a part of the company. It will be a part of the distribution or a part of delivery. It won't be a standalone business. And I think that those that would be a standalone business, perhaps a delivery model, a last mile logistics, something in the pharmaceutical space, I think those will take a lot of time to make money. And you'll be looking at more of a VC type of transaction than a traditional private equity transaction in that space.
Interesting.
Can
I think yeah,
add,
of course, go on, Pedro.
What's interesting as well is that the regulatory changes helping. So, for example, if you take the medical example that was used, you might have had regulation stopping you from doing this. But now, given the situation, regulators, ministries, governments are looking at it and saying, look, we need to try to make it happen. So, take, for example, we've seen this in Kuwait with the Capital Market Authority, enabling technology to be used for having virtual AGMs, and this happens across the GCC or maybe across the world as well. So the regulator starts to look, the governing government parties are looking at how to enable distance actions that might have been difficult in the past. So just wanted to add that comment.
Yeah, just on that point, it's a great one because I sit on the board of a company in Nigeria. Last week we had the annual AGM. It's a public listed company. We always used to have to go to Lagos in person, and then this year everyone just dialed in. It was totally easy and it was seamless. And so I think going forward, that is now that business now has changed. You can now have an AGM in Nigeria for a public listed bank through this means, which would have been unheard of 6 months ago.
Chapri, you said.
Yeah, I just wanted to echo on this particular part. We need to watch out the space of the regulatory changes that are going to be brought about during this time, because these would potentially be the ones which would define how the investments and the foreign direct investment into the countries would go in. And relaxation of some of the regulations. In the past, we've seen certain governments being averse to privatization of key infrastructure space, probably would relook at those things.
That's it. I think it's a good point. I think just one last question now, which for each of the panel to take into. I think it's been a really interesting discussion. I mean, we could go on all day and all night, I think. And I'll start with maybe sort of start at the top of my screen. So start with Charaparaya first. I mean, I think everyone would be interested who's listening in to hear, what lessons so far will you take personally from this pandemic? So sort of just a bit of a personal reflection from each of our learned panel.
Wow, this one is a long list, to be honest. I mean, I've learned a lot about myself and in general the human behavior itself. So the behavioral inertia is out of the window when push comes to shove. We've managed to get used to the whole lockdown, and lockdown has become the daily jargon that we use. COVID-19 has become a daily jargon. Hygiene has become the real thing that you need to focus on. The fact that you can work from home and still be productive. I mean, there are conceptual changes and the shifts that have come about in the way you look at the world has been personally humbling, as well as provided some growth.
Saeed.
I mean, I would completely agree with what you've just said. But the other thing I would add, which is probably a bit more specific, and I think this applies to, I mean, we got a lot of questions about how governments could improve, and the question list as well. And I think there is a lesson as you go into this crisis that is emphasized is financial discipline. Whether this is applied to governments, government-owned companies, state-owned enterprises, or private groups, financial discipline is absolutely important. And if you don't have financial discipline, you will never be ready for any crisis. And when crisis comes, you will cripple. So I think that's one thing that I would stress on as a lesson learned. But again, there will be a lot of lessons I'm sure we will also realize we've learned in retrospect in 6 months or a year's time.
Taimur, interesting comment from RJ saying, isn't it a shame that it seems that it required a crisis of this magnitude to shift attitudes and allow innovation to take center stage? Interesting point. Taimur, what lessons for you?
No, similar as the group. I mean, I think it's it's been a very trying time, and I think we should also take a step back. All of us and people who are logged in and watching this, we all are able to work from home, and we'll have the benefit of that. But billions of people around the world can't go to their jobs. If they can't get to their jobs, they can't get income. So I think this has been a very just humbling time for humanity, and for me personally, it's you just sort of take a step back and you really realize how fragile sort of everything is, and it's sort of, I think we need this every 10, 20 years, frankly. I mean, not to this extent, but I think we've all learned a lot about ourselves and our businesses and our families and society.
Been a profound reset. Faisal.
I think a lot has been mentioned, but if I was to say it personally, I'd say this kind of more balancing, the feeling of more balance, the feeling of appreciation and gratitude for what you have and what is there in the world. I mean, I'm sometimes sitting and listening to the birds chirping and thinking, could I hear them before? No, I can hear them more now. So I think we're undergoing through a major reset of life as we know it, and it's important to reset your priorities and your balance everything you do.
I think hearing birds, I must say that the most beautiful thing for me was hearing the call to prayer during lockdown, when across the city, quite a silent Dubai. It's quite magnificent. James, last but not least.
I mean, I think one of the real positive aspects of this whole thing, I actually think a lot of us will look back on this period quite fondly in the future. And I'm assuming most, if not all, the panelists have got school-aged children and may or may not have been involved in their homeschooling at some stage over the last few weeks. And I think that's something special that that a lot of us have spent a lot of time with our kids and actually understand what they do every day when they go to school and how hard it is to educate and to keep children focused. And I think there's a huge amount of benefit that we will all bring from that.
My wife sacked me as a teacher after one lesson, but I agree. I think, look, the title of this webinar was Annual Investment Meeting, What Has This Pandemic Taught Us? And I think we've had a really interesting discussion, both from a business perspective and hearing some personal reflections at the end. And I wanted to firstly thank all our panelists, Faisal, Saeed, Taimur, Cherupariah, James, for participating. It's generated a lot of comment an online debate. I think it was really, really excellent to hear from you all, who are absolute leaders in your field, both here and internationally. And also, we ought to thank our hosts and Prashant for doing such an excellent job at annual investment meeting, and the Ministry of the Economy and the government here for all the support of these ventures, and indeed the economy as a whole. Prashant, I don't know whether you wanted to conclude with some remarks. I think Prashant, just bear with us. It's dialing in. Hello, Prashant. I can see you.
Yeah, thank you so much. Thank you so much to all our speakers for participating in today. We had a small technical glitch. We started off late, but the panel was very interesting, and the audience stuck on. So I would like to thank the audience as well for sticking around and sending us so many questions for the speakers. We do these webinars twice a week. So if you would like to register for our next webinar, which is going to be on the 11th of May, please do visit our website, www.aimcongress.com/webinar. Also follow us on our social media channels to keep yourself updated. Thank you all. Thank you, Marcus, for hosting such an interesting panel. And we look forward to seeing you in the future.
Thank you, everybody. Keep
Thank
safe.
you.